What's going on, guys? Welcome into your energy news beat here on this gorgeous Friday, February 26th, 2021. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado. Joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com, Stuart Turley. It's Friday. Hall Pass, how you doing?
Hey, it's a beautiful day in the neighborhood, and we got some development going on around here on our app coming around the corner, man. This is going to be hot.
Yes, we are dropping a mobile application here soon. We got the first mock-ups today. Ooh, it looks good, Stu. It looks really good. So we'll keep you abreast on that. Probably 2-3 weeks out, you'll be able to download it. Apple, iTunes, and on the Google Play Store. We have a packed show for you guys lined up. You can check all of that out and a bag of chips to my left. But again, continue to subscribe to this YouTube channel, world's greatest energy finance show. Check us out online, www.energynewsbeat.com. It's legit just an IV of news into your veins. Hit that pesky notifications button. Interesting day in the equities markets, Stu. We've got top line indices sort of all over the place. SPY down about 0.2 of a percentage point. NASDAQ trading at about 1% on the upside. Dow Jones down a full percentage point. Very interesting. Here's the key. 10-year bonds, they're down 4 percentage points, or what we would call 7 basis points. Currently trading about 1.45 percentage points. So that's really what you're going to see driving the NASDAQ up in comparison to the rest of the market. As yields fall, that NASDAQ will continue to sort of fluctuate, at least in the short term. Give you guys an idea, the Federal Reserve PCE index, which is a data point that traders watch very closely, that actually rose 0.3 percentage for the month, which was slightly ahead of the 2.2 degree expectation, which is, I think, part of the reason why, again, we're seeing the NASDAQ come. But, frothy day on the markets, as I say, on the, give you guys an idea, even on today's stocks like this, Alphabet, Facebook, Tesla, they all dropped 3.2, 3.6, and 8%. That was on Thursday. Today they were able to sort of hand over hand. No data points dropped this week. Next week we'll get jobless claims. A little short February. We got, Monday when we come back, Stu, it's March 1st, baby. We're already rolling through. We got our last round of earnings today,
Wow.
which means we should probably segue into crude oil. Not a good day, Stu. 3 percentage points off that top line index. Crude oil drops all the way from about $63, $64. We're currently trading $61.34 for that front month contract on WTI. Back end front month of the Brent, 64.30, so it shaved about 2.5 percentage points. Back end of the WI curve down to 57, 56. Just taking a little bit of the breath. Rigs plus 5 is not the best thing for the market. I mean, we needed to, Stu. I mean, this has been an unbelievable bull run. Sort of expect a little bit of a pullback. Not that I saw this coming, but I still think $61 is overvalued. So I think moving back in the direction, some interesting numbers came out on the data side this week. We'll be watching as the new numbers come out this week, especially on the natural gas side. Can we stay above that 3 billion or 300 billion cubic feet drop? Be very interesting. Speaking of natural gas, basically flat today. It's about 3/4 of a percentage point, or about 1/4 of a percentage point, on the downside, $2.76. Weather models are just turning warm. I know outside right now here in Denver, we've got 2 inches of snow, but baby, it's hot. It's all that. Now it's that wet, mushy snow. Went from that really light snow that couldn't be used for snowballs. Now you can just nice skim one over the top of your neighbor's head that you don't like.
I wonder what whizzing by.
Yeah, no, exactly. I know over where you're, so it's getting hotter. So I mean, definitely a lot of people on that case. Let's go ahead and move over to XOP, which is our EMP securities contract. It's down 2.8 percentage points, so not good overall. We're still above that $80 mark, but about 80.02 back or front end of the OIH curve, just trading slightly under $200, $199.56. That's about a 1.6% downside for all you Dogecoin handlers. That's up a 0.5 percentage point. Let's look at some of my equities. Big movers on the downside. PBF Energy, Abrejos, Ring Energy, they're all down 7, 8, and 9 percentage points. Haldor down 8.7. EOG, which will cover their earnings, not a great day. They're down 8.6%. And Tensico Gas, they're down at 28 percentage points. Is there a light at the end of the tunnel? Some companies did finish the week well. GeoPark, gotta love them over there. They're up 1%. Matador, they're up 2.6 percentage points, rating a little equity. Valco Energy, they're up 3 percentage points. And American Resources Corporation, go America, of course, it finishes up 10 percentage points. Stu, internationally, what do you got for us?
Boy, I'll tell you what, speaking of Jim Park is just a class act.
Yes.
Hey, good management, good numbers. Hey, first one out of the block, Michael. We got our boys over at Shell. And India and China led the recovery in LNG demand post pandemic. Let me give you a couple numbers here. Company said that India increased imports by 11%, and that is around 7 million tons to 67 million tons. That's a lot of LNG. That's a heck of a lot. So China is also importing just a boatload there. So as demand grows, a supply demand gap is expected. That's why it's really important. With those two sucking up all the LNG out there, there'll be more going on. Okay, Exxon. Turning the corner here. This one goes up to our Canadian brethren, the oil sands. That is a beautiful looking pit. I mean, that is oil sands at mining at its finest.
Yeah.
Now, that is really sad from the standpoint that the oil sands tar can't build on it anyway. Might as well get oil out of it.
Might as well get some money for it. I like it.
Exxon reduced its estimate of recoverable reserves to 15.2 billion as of December 31st, but they're getting rid of all of their estimates over the oil sands. And I really think it's not necessarily because they're green. I think it's because they can't get it out of, if you want to know my selfish opinion on this Exxon story. They're trading today about 54, 57, somewhere in that area today. And they're not being really rewarded for their direction. So that one for the sands. Okay, here we go. Coming around the corner. Michael, I need your opinion. On this one, we have Icewarn's Platts of hasty Brent oil market reform. What they're doing is they're considering putting in WTI into the mix calculation of Brent. I want your thoughts. Want to see what you're thinking on that one.
So we ran this story back under the old regime. We were talking about there was this whole new realm. They were going to call it the Gulf. What was it, Stu? It was like the Gulf Coast Index, where they were going to change from Cushing to this new seaborne route that was a little better, and it was all because of negative $37 oil that happened. We've had $100 of oil growth since then, so we might as well take a stance. But here's my thing. I think WTI does the job. Everybody knows what it does. I don't think changing it is necessary. Do I think incorporating into Brent? No, because it's different flavors. There's a reason why we have international benchmarks. If it ain't broke, don't fix it. I don't think a once-in-a-lifetime event needs to cause us to trade, because did anybody really get impacted by oil going negative? I think it was fun. Was there maybe a financial firm that got on the backside of something? Maybe, but, trade at your own risk, baby. I've been there before. So yes, do I think it should change? Not the way they're proposing it under this. No, I'll tell you that. What do you think?
I think it needs change, but I'm reluctant to change what it is right now because, to be honest with you, if Putin does step on WTI and try to crush it, I'd just soon keep it independent. But just a thought.
Yeah. No, I completely agree.
I like hearing your opinion on a Friday, though, other than
go
away.
It's just, so here's, because now we're going to have to relearn what this phrase is. Now we're going to have to, it just seems to me, there's no reason to do this, in my opinion. You know what I mean? It just seems to me.
I hate to say this, but I'm going to agree with you.
Unfortunately.
Are you okay?
I'm good. What else you got for the show today?
That's it, man. I'm agreeing to agree with you.
We're going to end the week on the International News List by you agreeing with me. I'm going to take that as they come, and all that stuff via the world's greatest energy newster, Stuart Turley, on energynewsbeat.com. I'm always struggling to find IR guy of the week, and then on Friday he just shows up. We got IR guy of the week, EOG David Strike. Okay, great. I mean, we've got a new term. So we all know EOG dropped earnings today. I'll read you top line numbers. They're down 8.9 percentage points, mostly because they had huge growth this year. And it's clearly equity markets do not want you to be reporting growth at all. But you got to love this, Stu. On one of their slides, their IR slides, it's now not core assets. They're calling it double Permian. We have a new phrase now. It's not just they're not just a Permian company. They're double Permian, Stu.
Double Permian.
Next month will be triple. So David Streit, IR Guy of the Week. He'll be in the running for IR Guy of the Year. There's some close calls. We've got a great group of people. Talk about the spin doctors. This will be Spin Doctor of the Year.
That's right up there with the IR guy out of India when he said energy's the next energy. Go figure that one out.
Energy is the next energy. So it just cracks me up. If you're actually looking at how they did, they actually did decent on a quarterly earnings share. They gained. This is why you can't believe. They beat on earnings. Their stock price is going to, because they beat on earnings over Zach's consensus was 38 cents a share. They reported 71 cents a share. So, and they're down 8 percentage points. Why? Nobody likes growth now. Take the oil price and sit on it. This is partly why you talk to guys like DRW. They think EOG needs to go away via a merger with somebody, who doesn't need, Chevron doesn't need to necessarily grow. They just want to be collecting checks. So that's where I think some of that, merger and acquisition stuff from the EOG side comes in very handy. We've got a couple other earnings here, but first, I had to get IR Guy of the Week out of the way.
That was funny.
Send us in your recommendations. Great guy. Rig counts quickly. They're up 5. So we're at 402. Hey, drill away, I guess. Drill at your own regard. Better be hedging. Apache, they actually report decent earnings. They're only down 2.3 percentage points. That actually beats markets, which were down 2.5 percentage points. They had about a $10 million loss, which is about 4 cents a share, which is, considering it's Apache and that dumpster fire over there, it's not bad. It's clear the market liked it because it was just down on average. Fourth quarter, they provided about $500 of operating income, no debt reduction. Full year 2020, that was a $4.9 billion loss, or about $12 a share. So, it's, they're only mostly dead. Last company we got to cover, Sempra Energy, before Stu has a hernia. Full 2020 year earnings, they did about $3.67 billion, or which was about $12 per share. So give you an idea. Apache loses $12 a share. You got companies like Sempra in the midstream business. They make $12 a share. To give you guys an idea, they reported $414 million of earnings, or about $1.43 per diluted share. They were only down about 1.8 percentage points, so obviously clearly markets liked it better. Again, as people flee from upstream, they're going to flee to more utilities and these type of stocks. So it's no wonder we're seeing them beat a little bit, but yeah. Finally, earnings are done, folks. That's everybody. We don't have to hear me rant. Thank you. I know I got a throat lozenge, and I need to take this weekend to relax. But we will be back Monday. And we miss anything, Stu?
We have a hall pass. The other thing is, what a great show today when you can have an IR guy with a dumpster fire talking about the double Permian. I'm sorry, that's a t-shirt.
I like EOG. It's just it's just the new way to brand the Permian. It's not just core Permian, it's double Permian.
Double Permian with a hall pass.
Exactly. So, courtesy of the IR Guy of the Week, we're gonna let you get out of here, get back to work. You can get out of here on our dime. Send the checks to Stuart Turley, and we'll let you guys go. Thank you for checking us out. World's greatest energy news show. We'll see you guys tomorrow. Or Monday. What am I saying? I ain't seeing you tomorrow. Bye.